Okay, imagine for a second that you could own a tiny piece of a skyscraper in New York, or maybe earn interest from a loan to a major corporation, or trade a sliver of a famous painting just as easily as you trade crypto. Well, that's not science fiction anymore. That is the incredible promise of real-world asset tokenization. It's a technology that's literally building a bridge between two completely separate financial universes, and it's on the verge of unlocking trillions in value. So let's dive in and break down how it's about to change everything. But let's start with the really big question, the problem this whole thing is trying to solve. What if you could actually get the best of both worlds? You know, the incredible speed and global reach of crypto, but combined with the steady, predictable returns you normally only see in traditional finance. That right there is the multi-trillion-dollar question that RWA tokenization is finally answering. To really get why this is such a big deal, we have to first understand the two very different financial worlds that exist today. They're both incredibly powerful, for sure, but they play by completely different rules, especially when it comes to making money. So over on one side, you've got the crypto world, DeFi. It's kind of like the Wild West of finance, right? It's super fast, it's innovative, and yeah, it can offer some mind-blowing yields. But it's also a total roller coaster, full of insane volatility and risk. Then, on the other side, you have TradFi, the world of Wall Street, of institutions. Here, things are stable. You've got predictable returns from assets like real estate and government bonds. But here's the catch. It's basically a walled garden. It's slow, and it's almost impossible for the average person to get it on the best opportunities. And for the longest time, these two systems have just been running on separate tracks, completely disconnected from each other. You had to make a choice, either jump into the high-risk, high-reward open world of DeFi, or stick to the slow, stable, but pretty much closed-off world of traditional finance. There was just no way to get the stability of one with the access of the other. But what if you could build a bridge between them? That is exactly what RWA tokenization is. It is the technology that finally connects the bedrock stability of traditional assets with the speed and power of the blockchain. So what in the world is a real-world asset? Honestly, it's way simpler than it sounds. Just think of anything that has value outside of the crypto ecosystem. We're talking about office buildings, U.S. Treasury bills, a portfolio of car loans, corporate bonds, you name it. These are the foundational assets that have been powering the global economy for centuries. And tokenization? Well, that's just the process of taking one of those real-world assets and turning its ownership rights into a digital token that lives on the blockchain. Now, this is the really important part. It's not just some JPEG of a building. This token is a secure, verifiable digital proof of ownership, and it's all managed automatically by a smart contract. Probably the easiest way to think about it is like this. A token is basically a digital deed to a property or a digital stock certificate. It proves you own your piece of that asset. But here's the revolutionary part. Unlike a paper deed that's locked away in some lawyer's filing cabinet, this digital version can be traded with anyone, anywhere in the world, instantly 24/7. Okay, so we get the what and the why. But how does a physical thing like a building or a government bond actually get onto the blockchain? Let's walk through the pipeline step by step. It all happens in about 4 main steps. First, the real-world asset, say a portfolio of loans, gets legally packaged up. Second, and this is a really critical legal step, it's moved into a totally separate legal entity called a special purpose vehicle, or SPV. You can just think of this as a secure lockbox that protects the asset from anything that might happen to the original owner. Third, that lockbox, the SPV, works with a tech company to issue digital tokens that represent ownership of what's inside. And finally, those tokens are sold to investors like you and me, who can then go on to trade them on DeFi markets or use them to earn yield. And this diagram here shows you that whole flow in action. You see the asset owner on the left, working with that SPV in the middle to issue tokenized bonds directly to investors on the right. The blockchain is the engine that makes this whole thing run. It's this transparent, automated system that just cuts out so many of the traditional middlemen, which of course makes the whole process faster and cheaper for everyone involved. Now, the reason you're hearing so much buzz around this topic is because of the sheer scale of value it's about to unlock. We're literally talking about transforming some of the largest, but also the most stuck, the most illiquid markets in the entire world. And when we say trillions, we are not exaggerating. The Boston Consulting Group predicts this market could surge to nearly $19 trillion by 2030. Just to put that into perspective, that is almost the size of the entire U.S. economy. This is not some niche crypto trend. This is the future of finance playing out right in front of us. So what does this actually do for us? Well, first off, fractional ownership. That $10 million commercial building, now you can own a piece of it for just a few bucks. Second, global liquidity. Assets like real estate that used to be incredibly hard and slow to sell can now be traded instantly, anytime, anywhere. It also brings this incredible new level of efficiency. We're talking about settling complex, cross-border deals in hours instead of weeks. It lowers the barrier to entry, giving everyone access to investments that used to be only for the big guys. And it's all done on a transparent system where ownership is recorded publicly and can't be disputed. And if you think this is still just some futuristic crypto idea, think again. The biggest names in traditional finance are already making their moves. You've got BlackRock, the largest asset manager on the planet, launching its own tokenized fund. You've got Franklin Templeton. You've got Goldman Sachs. They're all building this stuff out. This is way past dipping a toe in the water. This is a massive signal that the institutions are here and they're serious. All right, but it's not a perfectly smooth ride. Like with any new technology that's this disruptive, the road ahead definitely has some bumps and challenges. We have to have a balanced view and look at the risks too. So on one side, you have this incredible promise of a single, global, super efficient market for everything. But the perils on the other side are just as real. The smart contracts that power all this can have bugs or vulnerabilities. We saw over 300 hacks and security incidents in 2024 alone. The regulations are still a giant question mark around the world, and these systems depend on getting reliable data from the real world, which itself can be a weak link. These are definitely serious hurdles that need to be cleared. But even with all those risks, the core idea here is just so powerful it's hard to ignore. RWA tokenization is that bridge. It's the thing that finally connects the old world of finance with the new programmable one. It's the key that's going to unlock trillions of dollars in value that has just been sitting there stuck for decades and finally make it accessible to everyone. And that leaves us with one final, pretty mind-blowing question to think about. As these two worlds, the digital and the physical, continue to merge, and as basically any asset can be represented and traded on a blockchain, are we watching the very early stages of a single, unified global market for everything of value? The implications of that are just massive, and really only at the very beginning of this story.